A yield curve is a graphical representation of yields on bonds with different maturities. The most common example is the government bond yield curve, but it is very well possible to render a yield curve for other types of bonds, such as corporate bonds, high-yield bonds, etc. The government bond yield curve is often referred to as the benchmark yield curve. The left panel of the image on the screen shows this curve for U.S. government bonds as of November 4, 2019. Analysis of the yield curve helps investors determine how bond markets are positioned and in what direction they are likely headed. This type of knowledge can help you to get a handle on where we are in the economic cycle, along with what the next phase will likely be. Each day, the U.S. Department of the Treasury, www.treasury.gov, reports the yields for various maturities of U.S. government bonds, ranging from 1 month up to 30 years. The table on the screen shows these yield rates for early November 2019. Please note that all these yields are annualized. For example, for a bond with a 1-month maturity, you will receive 1.58%, 12 equals 0.13%. While yield curves can be built using data for all these maturities, having so many shorter-term yields on the curve usually does not add much value. In general, yield curve charts will omit many of the shorter-term yields. The vertical axis of a yield curve chart shows the yield, while the horizontal axis shows the maturity of the bonds, often converted into months in order to get a proper scaling on the chart. The rates for each of the different maturities are plotted on the chart. The yield curve itself is the line that connects each of these yield rates on the chart. In general, the yield curve reflects the way investors think about risk. In a normal situation, one would expect to receive a higher compensation yield for longer maturities. When you lend money to the government for 20 or 30 years, it makes sense to receive a higher compensation than when you lend it for only a few months or a year. The yield curve reflects the yields for different maturities in a very intuitive way. The shape of the yield curve line, as well as changes in that shape over time, can help investors to determine the current economic environment and signal changes in the economic climate.